The regulatory and supervisory framework looks strong, backed by modern financial infrastructure. Can the sector remain resilient in the face of bleak macroeconomic indicators recorded so far this year? Well, Otto Hughes, partner at Iroko Capital, joins me now for an outlook on Ghana's financial sector. Thank you so much, Otto, for taking the time to join us. Like I said earlier, obviously the regulatory and supervisory framework is better or stronger now than it was back in the 1990s. Now, to what extent has that helped strengthen the sector this year, especially as we've seen the macroeconomy play out, looking at bleak numbers, inflation, the volatile exchange rate? Yeah,
definitely. I mean, inflation definitely is off track. The government was looking at a target of about 9% for the year. Currently, it's in almost 12%, let's say 11.9%. Looking at more controlled exchange rate regime, it's gone a little bit off track, almost got about 13% on that. But what I think you have in the under the current administration of the Bank of Ghana, it's a governor who has been in the system for a while. The doctor, Wampa, started out working at the Bank of Ghana in the mid-80s when Ghana was going through its extensive HIPIC type restructuring. And so with him and his team, you have people who clearly understand what the structural issues are, what the potential impediments could be, and they're working hard to manage. I mean, if you look at what they did with the rates, people expected the rate to either stay or go down. When it was at 15% MPC, they moved it up to 16%, trying to get ahead of the inflationary and foreign exchange rates. So they're working hard to keep things in check.
Now, if we have that, the MPC and the MPR at 16%, obviously, well, that is profitable for the banks, but it hurts the economy. And we have a similar situation here in Nigeria where the CBN, has to play that game of trying to balance development and growth. Does it, keep supporting the financial system, and then, looking at the macroeconomy, or the economy, as it were, still weak because, obviously the cost of credit is expensive, particularly for small business owners. So how much in terms of balancing both has the Bank of Ghana been able to achieve?
It was a challenge, but what you also look at, when you look at the numbers in Ghana, your assets for banks is up almost 20% so far year to date. Deposits are up about 15%. So banks are getting aggressive on deploying the leverage of assets to deposit ratio to try to still drive this lending to the real economy, right? So there is that aspect going on. Your overall loan to GDP in Ghana is still around 37%. It's about 50% in Nigeria, higher in Kenya. So there is still plenty of room to grow, even though the rates look high.
Do you think that sometimes these central banks, either whether in Nigeria, Ghana, or even in the US and Europe, do you think there's more focus on keeping the financial services strong, although we know the importance of that. But I feel that sometimes they do that at the detriment of the economy. We know that the banks are there to lend to the real economy. Because if they're not lending to the real economy, if small business owners do not have credit to grow their businesses, the economy won't grow. So we just have the banks like we've had in Nigeria just profiting from, treasury bills as high as sometimes 14, 15, although we've seen that come down, due to recent policies from the central bank. But that is what we're probably going to see. 16% is profitable for the banks, but the economy suffers.
That's always a challenge of a central banker, right? Balancing real versus the nominal, balancing the banks versus the real economy. Most of the central bankers who tend to be economists try to run their models, which they ultimately believe that as you keep key indicators in check, as your inflation is good and your foreign exchange is good, that overall it's good for the economy. For the business person who has to manage this on a day-to-day basis, it's challenging. Right, so you'd end up finding out that for some business people, it ends up being cheaper to borrow in foreign exchange. I mean, if you look at Ghana's short-term rates now, for example, it's about 23%, right? But you can do short-term or even longer-term borrowing in Ghana for 8 to 10% range. If you're willing to take the exchange rate risk, you can be able to go around some of these things. But it's a classic
economic
problem that must sort of back
itself. I guess the Bank of Ghana, the governor has his work cut out for him. Well, let's talk about, obviously, the government continues to support the sector, and there appears to be a focus on savings and loans companies. I believe there are about 23 of them, and it appears the government is focusing on this, at least to support the small business owners. To what extent do you think this has actually been able to provide easy, or at least, better access to credit for small business owners?
It's provided some. I don't know if better is the right word to use in the particular case. Government, on one hand, is asking call it the microfinance banks to provide more credit. On the other hand, to tightening the lending, the reserve and equity capitalization of these institutions. Now, as you regulate these institutions more, there is less they're able to do. When people could work with capital of, call it $100,000 equivalent, and that made them profitable and kept them focused on a particular niche. As you move the capital requirements now to the new numbers, which are effectively 500,000 cedis, which call it about $250,000, and the other one is about $150,000 for the other group of banks, you begin to change the dynamics and the economics of those businesses. So you are invariably forcing the business owners to make decisions on giving out larger loans to make them profitable. And that's not a business that they were in the first place. So as much as the overall policy is good, care should be taken on how it gets implemented.
Okay, let's just quickly talk for a minute or two about the M&A mergers and acquisition space. What's that going to look like? Well, we're almost at the end of the year, but perhaps for the last quarter, perhaps first quarter 2014, are we going to see activities in that space?
I think activity would continue to be there. Recently, First Bank of Nigeria just announced its acquisition of a bank in Ghana. But most of your M&A activity in the Ghanaian banks have been driven by SNIT, which is the National the National Pension Company, right? So they own, I'll say at least 15% in about 6 or so of the banks in Ghana, including the largest bank, Ghana Commercial Bank, and they've been aggressively divesting, I should say, of their privately held banks. So if you look at what EcoBank did in buying Trust Bank, or if you look at what Kedari did, for example, in buying First Atlantic, or what First Rand tried to do for Merchant Bank, these are all institutions that SNET owns meaningful stakes in. I expect SNET to continue to reduce that stake in the privately held banks as it changes the look of its portfolio going forward.
So if we see more M&As, would that reduce the number of banks? And of course, keeping in mind the fact that we do have Nigerian banks who are there, and some more, hoping to, of course, establish their own footprints there too.
You haven't really seen any reduction in banks in Ghana as part of the M&A. Actually, the number of banks have increased. The one reduction you saw was when Access, as part of the Intercontinental acquisition, merged into Intercontinental Bank, right? But you haven't seen too many local banks merging. It's not unlike what you had in Nigeria, where the capitalization moved banks to merge. You haven't seen that in Ghana. What I expect you'd see would be more foreign entrants coming into the market, because the ROEs for Ghanaian banks continue to be high, in the high 20% range. So even though it's a relatively small economy, it's a fairly profitable business to be in. Okay. So I think you'll see more foreigners coming in than locals.
So are you optimistic about Ghana's bank? Obviously, looking at the support that the sector continues to get from the government, one gets a sense that it will continue to remain strong and resilient. Do you see this continue?
Definitely. I see that continue. Strong, resilient. It's a great place to be. And some of your best performance stocks on the exchange this year have been the bank. So all in good.
Okay.